Welcome back to Trading Day. Your call 1300 30 34 35. That's the number to get us on. You can always email your market queries to yourcall@yourmoney.com.au. Our panel today is Elio D'Amato from Lincoln Indicators. We also have David Novac from Wealthwise Education. Now, Don is on the line from Brisbane. Your question for the panel, Don.
Oh, hello. Thank you. I was wondering whether I could ask the panel about the likelihood of the Australian Labor Party getting elected on the weekend and their policy to withdraw franking credits for retirees and their self-managed super funds. What would be perhaps an avenue that somebody could adopt? Would you go to unfranked shares or what would your advice be on that? Thank you.
Okay, to restructure your investments in case of a ALP win. Elliot, did you want to kick us off on that?
Yeah, well, the first thing is don't panic. Ultimately, at the end of the day, franking credits in of themselves. Now, it's important to also just stress here, Don, that we're talking about the cash refund component of the franking credit. So the franking credit's still attached to a dividend. It's just you won't get it back as a cash refund, which is what self-funded retirees are obviously very disappointed about with this bit of legislation. And the reason why I say don't panic is because there's still quite a few hurdles in which need to be passed before this legislation goes through, and they have to get through a pretty hostile Senate, or what will appear to be a pretty hostile Senate. So I don't know if it's a fait accompli as of yet. As to should it pass, so should it get through the Senate and the like, and obviously you need to seek independent financial advice in order to learn more about the ramifications and how they relate to you personally, because I cannot do that on air. Yes, one of the options is to consider unfranked dividends, and you've seen that quite a bit actually recently with a lot of the REITs being bought up in recent times. I don't know if you've noticed, but you're supposed to have a property market correction, yet all of a sudden REITs are going up. How do you figure that? Well, that's a large part of income-seeking investor going into those unfranked dividends. But it's important to note, though, that you shouldn't chase franked dividends at all costs. And I mean, there's a litany of examples like the banks in recent times where their average return hasn't been all that super, but worse still, even worse than that, you can throw in stocks like AMP, for example, and a whole range of others whereby, yes, they may be paying a fully franked high yield, but if they're a poor business, then they're not going to be necessarily doing that well. Now, interestingly enough, we've just brought Telstra back in as a star income stock, so we've avoided a lot of the carnage there and feel that now is a better opportunity to consider them as an investment. But it's about being proactive with your investing and really maximising the dividends as they come about. So the Lincoln Australian Income, for example, Fausia has, we rotate or cycle through our stocks and dividends looking to buy in at about 60 to 90 days prior to the stock going ex. Our back testing shows that it generally tends to outperform the market by around 2 to 3% in that period. Doesn't mean it'll be positive, Don, it just means it outperforms. And you can maximise your yield quite strategically, provided you're invested in those quality businesses, because if they're poor, well, you know what happens after it goes X, it falls off a cliff. I don't have enough time to really cover off on all the different strategies. I just want to emphasise, don't panic, Don. I know it's frustrating, I know it's disappointing, but there's still a bit of water to pass under the bridge yet, and I wouldn't think that this battle's over just for the moment.
Okay, David, anything else you'd like to add to that?
No, I think Elio covered that quite well, actually. Yeah, look, I just think there's some opportunities. I mean, if there is a correction, I mean, look, I'm just looking at NAB here. It's really gapped down after going ex-dividend today. I think the banks, look, people will still chase the banks on yield, and you know, I mean, it's not really exactly a growth sector, that's for sure. But like Telstra, as you're saying, I think there's not going to be that much of an impact, really, and especially, like I said, well, interest rates are so low, and the prospect of maybe a further cut to interest rates in the second half, as they're saying and predicting out there, that'll make it even more attractive. So I think it'll wash out, and it's not a fait accompli, as Elio said.
But it's going to take some time, actually.
Yeah, but the frustrating thing is you've got things like industry super funds and other retail super funds whereby, you know, direct investors have taken the step to move away from these, you know, mediocre performing, terrible businesses in order to control their own wealth, and yet they're being dragged in by this perception of chasing a tax break. And trust me, I've seen some really bad investment decisions over the last 13 years I've been on air in regards to, you know, chasing tax. I mean, we're thinking about the ostriches with leaves, those agri-businesses, not selling out of stocks after you've made a profit, even though the fundamentals have turned for the worst. So don't get caught up in chasing tax benefits, because they lead to bad decisions. Ultimately, focus on your stocks first and foremost.
Yeah.
Okay. Don, thank you very much for your call. Russell is now on the line. Russell's calling in from Perth. Your question for the panel, Russell. Russell, you there? No, it doesn't seem Russell is there. No, I can hear myself, but Russell is definitely does not seem to be there, but that's okay. Russell, if you can call back, perhaps you could call back and we could answer your question. 1300 30 34 35 is the number to call. You can also email us your call at yourmoney.com.au. We're going to go for a short break now. When we come back, we will answer more of your market queries, so do stay with us.